Hello everybody, this is Sabisaj Paul from Eastern Financiers Limited. Now the stock markets have been trading with a negative bias for quite some time, and finally today, 16th June, the benchmark indices actually slumped to fresh 52-week lows. The BSE Sensex plunged over 1000 points or over 2% to 51,495, while the Nifty 50 tanked 331 points to 15,360 levels. Now, what are the factors which are really pulling the markets down to these levels? Firstly, I think the Fed Reserve finally delivered a rate hike at the upper end of the expected range, and it pushed the global markets down. Now, the central bank actually raised funds by 75 basis points to 1.5% to 1.75%, which is the biggest increase since 1994. Now, this was to tame inflation, which accelerated to a 40-year high of 8.6% in May. The Fed, going ahead, hinted at more rate hikes if inflation were to remain at these levels. Now, similarly, if you remember, RBI also increased rates by 50 basis points last week to 4.9%, and over there also it is expected that rates will further go up to 5.5 to 6% by the end of the year. In addition to this, the Bank of England is also likely to follow the Fed and hike interest rates very soon. Over there also, just the central bank raised interest rates by 25 basis points in May, taking it to 1%. In April, the UK inflation climbed to a 40-year high of 9%, and the bank expects that it could go up to up over 10% in the second half of this year. At the same time, the economy over there shrank by 0.3% in April. So, if we see that the global markets have corrected sharply given the way the Fed has increased rates, and the markets are actually pricing in a slowdown in growth in developed economies, given such a rapid increase in interest rates everywhere. In addition to this, if we see, oil prices have remained high given the tight supply after the Fed rate hike, in fears of a recession in the US. If we see that not only this, but OPEC did not lift its production as agreed for the month of May. Its production actually decreased, according to the OPEC's latest monthly oil market report. If we come back to India, foreign institutional investors have remained net sellers for the ninth consecutive month, given the weak sentiments. They were net sellers to the tune of 31,000 crores in June till date, which is 15th, and this is to top up about 2.2 lakh crores worth of selling in the first 5 months of this calendar year. Now, the only saving grace over here is that domestic institutional investors have actually supported the market, and they've bought about 2 lakh crore worth of shares so far this year. Now, if we see this current downside, every sector has actually participated in this down move, but it has been led by the Nifty Metal Index, which is one of the largest losers in this global slowdown. Now, the Nifty 50, after breaking 52-week lows today, it corrected significantly, and it touched a low of 15,369. So, if we see in the last 3 months, there was strong support at around 15,650 odd levels, and there have been several instances which we have seen that the markets did not break below those levels, but finally it happened today. So we given this, we can expect that there could be further downside from these levels to around 15,000 or 14,600 odd levels. And for the time being, my sense is that 15,650 could act as a resistance for the markets. Lastly, I think the volatility index, which is called the VIX, it closed above 22 levels today, and it clearly indicates that volatile swings can continue, and the trend is expected to remain in favor of the bears, as long as the India VIX, which is known as the fear gauge, holds above the 20 mark. Thank you.